Hi guys and welcome to the trading show. This week we are gonna talk about
markets. Nasdaq closes at record high. Our portfolio, rally in metals. Tip of the week, bias on American bond futures. And the weekly rollovers.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Stock indices on historical highs. We see in this chart the Nasdaq future that managed to overcome this resistance, even if it doesn't show particular strength. You may notice some very small ranges over the last 2 days. The same goes for the mini S&P. Also here we are above the all-time highs. Volatility is obviously decreasing everywhere. The daily ranges have narrowed a lot, and a little weaker instead the European markets, even if we see prices close to important highs. Regarding the energy sector, we see a strong weakness in natural gas, which is in downtrend, and this week loses more than 10%. Strong on the other hand, the whole metal sector. I show you the explosive movements that platinum has had over the last 5 days. It has gained over 13%. Finally, the soft commodities and cereals sectors are weak. As for currencies, we see the EUR/FX that has managed to get out of the trading range and is continuing in its bullish run. Let's see where it will arrive. It seems in any case a movement destined to continue upwards. And finally, let's take a look at Bitcoin that has recovered over the week. If you remember, we left with a very important drop the previous week, more than 10% during a single trading session. As you can see, in a very short time, he managed to return to the highs and seems to be able to maintain these levels. Regarding the implied volatility, there is not much new to report compared to the last week. The situation, as you can see, is very similar. We are in full contango, a sign that operators don't expect particular troubles in the immediate future. We also take a quick look at the term structure of the VIX futures, which in recent months showed differences compared to the term structure of the volatility indices. As you can see, also here we are in full contango, so the situation is actually very similar whether we look at the VIX futures or if we look at the volatility indexes. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Welcome everyone to this new appointment with the analysis of our portfolio. I am Alessandro Danos, and this week I want to talk you about the metals market. Because Titan this month made us trade a lot of metals futures, and we can see that here we can see the silver market. This is a strategy, a trend following strategy, and in the second part I will show you a reversal strategy on the gold. We can see here that this strategy on the silver produced this beautiful trade, a take profit of $4,000 in 1st of December, so just a few days ago. And at this moment the strategy is again in position, a long position. Now we can see that the broker position is of long of 2 contracts, because another strategy is long already from yesterday. We can see here from the list of trades the take profit of 40 hundredths. And also looking at the equity curve, we can see that in the last year and some months, a year and a half, here the data starts from September 2019 and lasts until today. We can see that the equity line is always rising, and the annual period confirm what we have already seen in the equity curve. This system managed to reach a profit of $50,000 with an average trade of over $600. Of course, this system is on the silver market, which is a very heavy market. The big point value is $5,000. We can see also here that the stop loss for this system is 2400. So we can say that is a considerable size for a stop loss, but it is a correct size because this market is very volatile and as I said, is a heavy market with a big point value that is really big. This system, as said, is a trend following strategy, but it not enter on the highs and the lows of the previous session, but on the highs or lows of the previous bar. So in this case we are developing on a 60 minutes time frame, so the system will enter long at when the breakout occurs on the highs of the previous bar, and vice versa for the short side. Of course, the trend following method is the more performing idea of trading for the metals market, but if we going to see the next system, we can see that this strategy is a reversal strategy. So maybe someone could laugh or maybe think that is not possible, because of course the trend following is the most performing, as said, idea. But in the recent years, and especially from, I must say, 2017 until 2019 and also until today, this market has shown some mean reverting natures. And this system, in the specific, enters when a fade breakout occurs on the highs or the lows for the long side of the previous session. This new behavior nature of this market may be due because of the increased liquidity that has arrived for this market. Now we can take a look at the average trade. There is over $800 with 2 contracts, and also the annual period analysis as shown in 2020, a profit of over 67,000, always of course with 2 contracts, because we trade this system with 2 contracts. And as we can see, this system has struggled in the first part of the year when there was the pandemic, and the gold was pretty trend following for the most of the time, while in the second part, and especially from September, we can say, so the last 2-3 months, the strategy has recovered very well, reaching new equity peaks.
Hi everyone, and welcome from Andrea Unger. Today we will have a look to the US Treasury bond futures. So this product basically is, in my opinion, the most interesting product on bond future for what regards the US markets, and is listed in the CME group exchange, and in particular into the CBOT exchange. So this product has a session that goes from Sunday to Friday, from 5 p.m. to 4 p.m. Chicago time, and every day there is a pause between 4 p.m. to 5 p.m. So the point value of this product is $1,000, and the minimum price fluctuation is 1 on 32nd of a point, and as consequence the tick size value is $31.25. And in my opinion this represents the main problem of this product, because the tick size is extremely high, and then it's quite difficult sometimes to find a good average trade on the strategies, because with such high tick value it's necessary of course to find a quite high average trade in order to find a sustainable strategy from the point of facing the impact of the slippage and commission. And usually, so normally this product is listed on 4 quarterly contracts that are March, June, September and December. Now we will have a look through this chart here on multi-charts. That is my trading platform, and in particular here what I've done is I have optimized what would happen if we would enter for each day, for each hour of the trading session, and we can see here the optimization report of this optimization job, and in particular the aim in this case is to try to discover if there is an interesting bias movement or not during the trading session. And in this case, as we can see here, it seems that there is a sort of bias, because from here, for example, it seems to start a bullish trend during the trading session that lasts until 23 o'clock, that is 11 p.m. And from here to here at least, it seems to start an interesting bearish movement. Then here it seems there is another bullish movement, and here for white bars there is also a bearish bias again. The problem in this case is again related to the tick value, and because of that tick value that is extremely high and important, I came to the conclusion that it's not possible to trade this kind of product intraday using a bias approach. In fact, here if we would sum the average trade of those bars, we most probably cannot achieve neither the results of one tick, so it's pretty unsustainable, this kind of strategy, and for this reason the long side would not be tradable. And in this case we can also consider that the percent profitable of this kind of strategy would be extremely poor, so the bias seems not to be so defined during the regular trading session. But also for what regards the bearish side, we have no good news. In fact, if we would sum the average trade of those bars that are pretty consecutive, we will not arrive to a good average trade as beginning point for creating this kind of strategy. So in a few words, in my opinion, this kind of products is extremely interesting, but for some other trading approaches, such as mirror reverting approaches, mainly on multi-day basis, because on intraday basis and with this kind of approach, you will probably reach a result that is not so good to be traded.
Let's take a look at the rollover calendar for the next week. European bond futures, mainly Bund and BTP, will expire on 8th December. There are no other settlement dates, but I remind you that the following week we will have the expirations of all stock indices. Usually American stock indices are rolled 1 week in advance, so already next Friday it will be possible, for example, to roll the mini S&P future. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.